Over the past year, there has been one company that has risen from the shadows and is now in the spotlight, and that is NIO. Through a series of moves and external factors, NIO has successfully been able to come out of bankruptcy and disrupt the car market in many ways. During this time, the stock price has reflected this disruption, as the stock went from under $2 a share to, at the time of recording this video, almost $50 a share. But how much of this stock price is warranted, and is there still an opportunity to invest? In this video, I'm going to go over how NIO went from bankruptcy to disruption. Welcome to Kaz Gains Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Before we get into the opportunity of NIO, we must start from the beginning to truly understand where the company is coming from. On September 13, 2014, the Formula E season was born into existence. The competition consisted of a race between electric race cars over a series of competitions. Each season would have 11 races that would ultimately culminate in the final Formula E championship. Countries all over the world would nominate their most qualified racers and fastest electric race cars. Major companies like Envision Energy, Renault, Audi, and Venturi stepped up to represent their country. Yet, one company stood out from the crowd, which was China's team, named China Racing, that was later renamed to Next EV. While Next EV only ended up placing 4th in the championship round, the vehicle they showcased had impressive potential. Board member and founder William Li had an idea to leverage Next EV's technology and create an electric vehicle company starting from top to bottom. This brand was, as some of you may have guessed, NIO. Immediately, several top brands invested into the company, including Tencent, Baidu, and Lenovo. NIO's first vehicle, the NIO EP9, could go 0 to 124 miles per hour in 7.1 seconds, leading it to beat the lap record on a Nürburgring track in 2016. The vehicle could also have its battery pack swapped in a short period of time, which will become relevant very soon. After starting NIO, William ran into some major issues. While he and his team could make an enticing prototype, it was practically impossible for them to manufacture the vehicle, as they had no expertise in building the machines that create the parts. In other words, NIO did not know how to make the machines that make machines. On April 4, 2016, William signed a contract with JAC Motors to have JAC, which has experience with manufacturing and supplying, to produce NIO vehicles. To make this clear, NIO was not manufacturing their own cars. The development with NIO and JAC is extremely important to pay attention to, as it creates huge impact on not just NIO's production output, but also the automaker's profits. Around a year later, in 2017, NIO had plans to create its own factory in Shanghai so that the automaker did not have to rely on JAC Motors to manufacture the automaker's vehicles. However, after taking a deeper look, NIO's team decided to shut down those plans. In 2018, NIO unveiled the NIO ES8, a 5-door SUV3 with a 70 kWh battery pack that gave it an NEDC driving range of 220 miles. At the cheapest model, this vehicle cost $67,000 US. To be honest, this deal doesn't look so great, as even with the NEDC overestimate, the vehicle still has a very short driving range for the price. Keep in mind that today, the ES8 has a range of 360 miles on the NEDC range test, but when it was first revealed in 2018, it had a range of just 220 miles. In the following year, NIO unveiled the NIO ES6, which can go from 0 to 62 miles per hour in 5.6 seconds and has an NEDC range of 317 miles. At the cheapest price, the NIO ES6 cost $54,000 US. Not the best considering that the NEDC overestimates the range, but definitely getting somewhere. To the public, these vehicles were extremely underwhelming on their release dates and gave NIO major financial troubles. After being on the verge of bankruptcy, NIO announced a $1 billion backing from the Chinese government. This investment definitely marks a turning point for NIO. During this time, NIO was worth under $3 a share, and the current valuation of $48 per share shows how China's $1 billion investment saved the company while propelling it further. This is especially evident when in July of 2020, the NIO EC6 was officially launched. This vehicle starts at $54,000 and has an NEDC range of 382 miles, along with 0 to 62 miles per hour in 4.7 seconds. The reason why this vehicle is such a major upgrade is because of CATL's Nickel 55 ternary cell. With this new battery cell, NIO's vehicle will actually have bidirectional charging, which is better known as vehicle-to-grid. Essentially, you'll be able to transfer energy from your car to the utility grid or even your own home. What's even more interesting is what NIO unveiled following the NIO E6 reveal, which is, as many of you know, battery as a service. Essentially, how battery as a service works is that you'll be able to purchase a NIO vehicle and lease out the battery. This lowers the cost to purchase a vehicle by an estimated 25%, which can be a win-win for certain customers. In order to lease NIO's battery, you'll have to pay $150 per month, which is quite expensive for some. Another service that NIO offers is the ability to have your vehicle's battery swapped in a matter of 3 minutes. How this works is that every time you need to charge your vehicle, you'll go through this process. First, your vehicle will be driven inside the swap station by the swap station manager. Under the vehicle, there will be a machine that has a battery that will be swapped with the one inside your vehicle. This entire process will be done by NIO's AI. Once your battery is swapped, NIO will recharge the battery so that it can be used for the next swap. As long as you own a NIO vehicle, this entire process is free. NIO's battery swap service is definitely quite revolutionary, as they've catered to the needs of China's population. Yet, along with the pros of NIO, there are some concerns that pop up when we look at it from an investment perspective. When answering the question of whether NIO is still worth investing in, we must address a few questions. The first one being, does NIO's business model have the potential to be profitable in the future? Unlike Tesla, NIO is not vertically integrated. As we discussed earlier, JAC Motors is manufacturing NIO's vehicles, and NIO does not have any proprietary battery technology. This is important because, as NIO has disclosed before, they do pay a fee for every vehicle that comes out of JAC's factory, in addition to every CATL battery that is used. From the end of 2019 to when NIO was first founded, NIO has paid approximately $91.9 to JAC Motors. During this time, NIO sold 31,913 vehicles. If we take the total amount that NIO paid and divide it by the vehicles sold, we get $2,879. This means that NIO pays JAC Motors $2,789 per vehicle, which is not too bad, although we do have to take into consideration that NIO does have to sell vehicles at a premium compared to other automakers. CATL's battery fees are quite low, as it is especially evident from the fact that even Tesla is using CATL's batteries. Given NIO's gross margin of 12% in the last quarter, it is evident that NIO does have the potential to make decent profits. However, as vertically integrated EV companies such as XPeng and Tesla ramp up production and lower costs against NIO, NIO's reliance on JAC could become a barrier to making profits. Over the long term, I do expect NIO to create its own factory, as the automaker did plan to do so in the past. Yet, it would be extremely difficult to compete directly with Tesla given their vertical integration in Giga Shanghai and branding. The EV market is large enough for others to thrive, but this leads us to the next question. Is NIO's current valuation overblown? As I'm recording this video, NIO is priced at $48 a share, which gives it a market capitalization of $60 billion. Unlike Tesla, NIO doesn't have any plans to expand out of the car market in the near future, as the automaker doesn't have much proprietary technology to expand elsewhere. The total passenger car market size in China is at $455 billion, so assuming all cars will become electric, as the vast majority likely will, then giving NIO a potential market share of 7% would be equivalent to $31.8 billion. At a forward price to sales multiple, this would value NIO at $127 billion, which is not much higher than the current valuation of $60 billion. Keep in mind that the car company with the highest market share in China is Volkswagen, which is at 14%, and following Volkswagen, Honda at 7%. In my opinion, the opportunity cost isn't too appealing at this valuation. However, this again leads us to NIO's support from the Chinese government. As we discussed earlier, NIO does have support from the Chinese government given the government's $1 billion investment into NIO when it is on the verge of bankruptcy. Even still, with other EV companies entering the market like XPeng and Li Auto, it'll be difficult for NIO to continue being the leader in terms of government support. Nonetheless, NIO's support from the Chinese government definitely reduces the downside risk on NIO. The last concern that I unfortunately must bring up is regulatory risks. NIO does not follow Sarbanes-Oxley regulations, which puts it at risk in the US. PwC Zhang Tian, the auditor for NIO, has let fraudulent companies pass its audits in the past. To be clear, I don't think NIO is a fraud at all. William Li seems very ambitious with his vision, and I don't doubt it, but I'm putting the information out there for those of you who could have doubts. Now, finally we get to the question, which is NIO still a buy at these levels? Personally, I'm not invested in NIO and I'm holding back on buying NIO until there's a pullback. Until NIO is able to vertically integrate or enter other markets, I won't be buying the stock at these valuations. I'm certainly not a financial advisor and this shouldn't be taken as financial advice. If you're looking to buy in, I would suggest looking at other opportunities as well, as although NIO is a fantastic company, I'd much rather buy Tesla for the potential in solar energy, international disruption in the vehicle market, and entrance into other modes of transport. Let me know what you think about NIO in the comment section below. I'm very open to seeing your opinion. If you enjoyed this video, please hit the like button and subscribe if you haven't already, and I'll see you in the next one.